Chester went on Wednesday, May 21st, 2014. It appears that yesterday's selling was a bit of an early holiday week or pre-holiday week shake and bake. You could see on this S&P 500 index daily time frame updated, today's rally pretty much erased all of yesterday's losses and a bit more too. Now, make no mistake, overall, even as strong as the S&P has been, especially vis-a-vis the Russell and the NASDAQ and the biotechs since the spring, really since early March, the S&P still has gone nowhere. I've been advocating cash, and I think for good reason. You can see just alternating between red and green candles with really no clear direction, again, on this time frame since, let's say, March. Now, if and when we get resolution, it may come sooner, it may come later. If you've been holding heavier than usual cash position or even a full cash position, I think you'll find yourself to be in a great spot. As long as you don't become complacent with your homework and completely walk away from the market, if you have your capital and confidence intact here, you'll be able to quickly adjust. That's so key, is to be able to quickly make adjustments as the market gives us more clues and information as to where it wants to go next on a broad scale. Again, we can make the quick adjustment and we'll be in a great position to make some moves here and hopefully increase our aggression as necessary. Now, be that as it may, I'm going to go back to our original kind of plan here into this holiday week or pre-holiday week, again with Memorial Day coming up on Monday. I kind of say that, I lump it all in together because I'm expecting tomorrow and especially Friday to be very holiday-esque. Again, yesterday's sell-off notwithstanding, we had the snapback rally today. Typically in these kinds of situations in the market, you don't want to play macho man with some of these beaten down growth stocks in terms of short selling them at current levels. They've already had pretty much the entire spring to correct here, and I'm not saying they can't go down into the summer, but you do have to know at this particular moment in time, again, we're walking into Memorial Day on Monday, and typically you're going to see more and more traders leaving their desks. Volume should shrink up a little bit. It's not exactly the most conducive situation to getting kind of fear and panic on the short side, which is what you want if you're shorting. So again, just keep in mind where you are. Don't get too carried away trying to be a gunslinger on the short side in the high beta issues. They often can, again, be ripe for bounces. And if you do want to play bounces, we talked about FireEye. We played it earlier in the week. Again, just be quick, be nimble. Understand these charts are still damaged on many levels. Yes, they can bounce, but they're still longer-term issues. Now, S&P 500, still no resolution. Want to start off the video with that. Dow Jones, initial breakout faded, but overall, with the Dow, you can see it's basically still where it was all the way back last New Year's Eve. And you can see, as strong as the Dow has been, as much as bulls have been pounding the table on how resilient the Dow has been, and it has been, of course, especially compared to the NASDAQ, Russell, and biotechs, net, it's still gone nowhere. So we don't have resolution yet. And it's still, it's still too early to call this a bona fide bull trap. We would probably need to see some real downside projection. Yesterday looked like we're getting initial downside follow through, have a mini bear flag. Obviously with today, we're just getting more of that kind of violent indecision. A lot of big red candles, then some big green candles, but it's kind of like a roller coaster ride. You go up, you go down, and when you get off, you kind of feel a little queasy and you're not sure what was really accomplished. Again, that old quote, don't mistake activity for accomplishment. Let's wait for the market to show us that it really does kind of want to accomplish something here before kind of throwing a lot of chips on the table. Now, the NASDAQ still, again, can bounce up to its declining 50-day moving average, can even overshoot it. I'll get to an overshoot example in a moment. But it's still going to take a lot of time, in my view, or a couple weeks probably, for this 50-day moving average now to smooth out and then start torquing up, which is what you want to see in a healthy uptrend. Overall, NASDAQ still a broken multi-year really busted abnormally steep trend. Now again, into the holiday week, you can break these purple lines here. We can break it to the upside, and that'll probably get bulls really excited. And again, I would not be stepping in front of this on the short side yet. We could easily bounce up to 4,200, but maybe at that point, then I would look to, I've talked about this previously, the short side. Again, use your discretion here on the short side. That's my point. And if you do play long, just understand we're dealing with kind of damaged charts here on many levels. The Russell is interesting in the sense that, you have everyone talking about, wow, maybe this is a big bear trap. The bears have nothing, when you have a big rally like today. And yet, look at the Russell. still below its, amazingly, its 200-day moving average. It's really incredible to me to see a major marquee leading index with all those high beta, small market capitalization stocks with plenty of institutional sponsorship by growth managers, and yet here it is just hovering below the 200-day. Now, maybe it's basing out here before it really rips higher. That, once again, is another reason to not be a gunslinger probably into Memorial Day with shorting, pressing your shorts on the Russell, unless you have full conviction, deep conviction we're going to crash here. Even then, I think you have a well-defined cover stop. You got to get out of the way. If the Russell breaches 1,120 to the upside, you have to get out of the way in the short side. If you are looking for a washout below 1,090, I still think another move down there probably sees all these dip buyers rendered trap and they scramble for the exits. But again, the Russell just looks like a mess down here below the 200-day, pinned below the 200-day, and it's a major index. And again, we're seeing this happen even incredibly, even as the VIX just gets slaughtered into oblivion. These volatility ETFs, I mean, it's like the 4th of July fireworks show in May here, just a complete washout. I still think this indicates a certain degree of complacency by market players into the summer, but again, there's no sense in kind of arguing with the market at this point. It simply is what it is. We have the Russell pinned below the 200. We have the VIX collapsing. I know there's a couple ways to interpret that, so let's see how it resolves. The biotechs, still no clear direction, still working towards the apex, this kind of narrowing triangle. So whichever way it resolves, again, can it overshoot? Sure. Can get up above the 50-day, 240, 245, but in my view, there's still a lot of damage that's been suffered here. Speaking of overshoots, Netflix, again, declining 50-day moving average, massive squeeze here. Again, you can see if you shorted down here and you were kind of Johnny come lately, you're in a little bit, or in a lot of pain, I should say, a good 80, 90 points here. But you know what? We can be objective. We haven't done that. We could see Netflix has had a massive run. It could still be forming a right shoulder here. And yes, the right shoulder can be in a valid head and shoulders top. It could still be higher than the left shoulder. But even if it's not, let's say it's not a head and shoulders top when it's all said and done, it's still a sloppy pattern going back many, many months. And I'm still reticent to kind of say or declare that even as strong as Netflix has been, that it's all well and healed. Again, you can see there probably is room to come down some more and retest some of these prior well-defined highs, the 270 area. But initially, again, the market seems like it wants to punish those latecomer shorts. That's fine. Let it do it. We'll just kind of step out of the way. And then, again, let me see if Netflix here punched through the Bollinger Bands. I do think if you are needing to kind of short, if you have the urge, Netflix punching up through the Bollinger Band, you could see today, any signs of reversing, I think, into the end of the week or next week. I think you can take your shots maybe on the short side with Netflix. Again, that still, I believe, still declining 50-day moving average is an issue. It renders any rallies guilty until proven innocent on the swing basis. So that's what I would be looking for with Netflix. Facebook finally tried to get its act together into the end of the day. It's still in this chop box. See if it can crack above, let's say, 63.60, 63.70. That's the nut to crack above. Again, holiday week, room to move above. Tesla's been kind of just wedging higher. Don't see a trade there. It's still in this long-term channel here going back to February, actually, declining 50-day moving average there as well. But again, I would not be stepping in front of these guys on the short side. Price line finally peeking its head above this well-defined falling channel, probably expecting a test of the 50 or 100-day moving average above. So what's more actionable? Well, I would say names like Diamond Foods, short squeeze plays on the long side, still a rising 50-day moving average above, I believe. Again, pretty healthy consolidation, good volume pattern. Again, Memorial Day into the summer, you probably expect all of their kind of products to be purchased. But again, technically speaking, any further strength out of this box, probably good looking short squeeze candidate. And again, speaking of not wanting to get caught short, look at a name like Forest Oil, FST. I believe it's very heavily shorted. You got to ask yourself, what are you trying to accomplish here if you're short this name down here? Look at the look this chart has. It's a trading vehicle. I'm not going to declare it healthy, but I would not be surprised to see it get a nice further rocket ship into the holiday week. So again, that's kind of where you want to be picking your spots. Del Frisco's a restaurant play. Watch it above the 58 moving average, 27 especially. Again, kind of like Diamond, decent consolidation. So those are a couple of long ideas. If I am looking to replay FireEye here, I'm keying off these 30-minute charts. A decent look to this chart here. If it can climb back, the closer it gets to 32, the more apt I am to re-enter it on the long side. Still trying to carve out some kind of bottom. Just key off of these. I would be keying off the 30-minute chart, I should say. 30-minute charts this week into the end of the week, because I think that's the time frame you want to be having into holiday short week. Workday, the closer it gets to 77, take a shot on the long side. Yelp above 58, probably could take a shot there on the long side. Again, these are all 30-minute charts. Splunk has been the dud of all duds. It might be finally ripe for something. I mean, even compared to FireEye, Splunk has been a dud, and that's really saying something. You can see if Splunk can clear 45.50, it probably can get some nice traction here, expecting a multi-point move. So I would keep, if you're looking to be opportunistic this week, looking to be kind of, again, in and out, a sniper on the long side, that's what I would be looking for. And names like Salesforce, can you try and short it? Yeah, again, just recognize the situation where we are. Nike, Visa, they just did not follow through lower today. So again, if you go short them, there's nothing wrong with stopping out for 1 or 2% loss and still expecting some of these crowded trades. The staples, Johnson & Johnson, if it ever loses 100, I'm still expecting them in the next couple of weeks to kind of unwind. Utilities, again, unwinding a bit. We'll see if the REITs kind of follow suit, IYR, especially lose a 20-day moving average. SRS and DRV are the inverse ETFs. Treasuries here, you can see this move over 114 initially failed. We'll see if we get some downside follow through below, let's say, 111. And keep an eye on Japanese yen. Again, it still hasn't been able to kind of follow through to the upside above, really kind of rocketing above. I had said 96. It's looking like now 96.50. If the yen can kind of rocket above here, typically this works inversely to equity. So it's going to be fascinating for us to look at this into the summer. It's been going nowhere for a while now. It's basically since last December, after just getting obliterated, did the yen FXY ETF. If and when this thing can finally stage a sharp snapback rally again, it's going to be very interesting to me, especially if you've been trading this. If you remember trading back in the flash crash 2010, you'll recall just how pronounced the inverse relationship was, I believe, even in 2008, between the yen and global risk. So it's going to be fascinating for me to see, and for all of us really, to follow along with this and see if the yen can actually get legs here above 96.50 and rocket ship out of here. What, if any, is going to be the relationship now with equities, again, global risk? I still don't see too much that's actionable, unfortunately. In commodity land, looks like all these softs are consolidating. Gold, silver, we get these intraday pops, but overall, silver needs to get above 19. It's still not much going on, unfortunately, there. Gold miners, once again, still holding on to by the skin of its teeth, really, are the gold miners, still holding on to this kind of 23.20 area. But again, really no trade. So unfortunately, I wish I could give you more as far as that's concerned, but looks like commodities kind of cooling off here. So that's pretty much what I'm looking at. Maybe a couple tactical long ideas. Probably not looking to get too aggressive on the short side until after Memorial Day for now. Again, this market is still kind of teasing us here. We have the strong parts of the market, the S&P and the Dow, but even they haven't been trending. We have the weaker Russell, NASDAQ, and biotech, but they look like they're kind of in, or at least there's a real threat of a bounce back mode into this holiday. So again, hopefully we'll get resolution soon. And when we do, all of that patience, all the sitting in mostly cash, and all the playing small and playing fast, that should help us out in a major way in terms of being able to quickly adjust, not just in terms of your capital, but your confidence too. Hope you've been enjoying these videos. Have a great night. Thank you very much.